All right, everybody, welcome to the 6/21/2025 HPT webinar where we break down our edge, we break down the week that we traded, we break down the strategy, we break down what's working, what isn't working, right? This was a phenomenal week, literally. It was a short week. We had 4 trading days. And 3 of these days were just absolute smoke shows, right? The open was literally just fell right into our strategy, our criteria. And what I really want to talk about in this session is the moving averages. Everybody knows I collect data on this strategy, and we have been for the last 10 months. And I just want to do a quick review here because it's quite remarkable. We started this 10 months ago in the month of September, right? And my goal was to prove to the world the importance of data, right? And how it builds conviction and where conviction actually comes from. Conviction comes from confidence, right? Confidence just comes from putting in the reps and looking at the numbers, right? Like, is it working? Is it not working? How well is it working? How often does it work? Is it reliable? And that's exactly kind of, what I want to talk about. Look at this. This is a large data review. This is crazy. This is the last 10 months. We've been logging this very specific strategy. Okay, and my goal with building this strategy was that it was repeatable, that it wasn't insanely complicated, and it was very easy to execute on, because execution is more important than your strategy, right? Like I'll say that again. Execution is way more important than your strategy. You could have a strategy that yields 100% results, but if you can't execute it appropriately and confidently, it's literally worthless. So execution, right? Like execution's it's so important. Okay. But how do we get better at it? Right? How do we know Tuesday morning after a rough morning and you have all these crazy variables going on? Maybe your boss is giving you shit. Maybe your girl or husband's giving you shit. Maybe your kid's just bothering you. Maybe your dog's barking. Right? How do you know that when this strategy presents, you are going to execute regardless of how you feel? That was the purpose of this data collection, to build the information and to really be like, listen, this strategy repetitively is hovering around 70 to 85% win ratio. So therefore, when I see it, is that worth betting on, right? Like that was the goal of all this. And it's crazy. It's literally, it's wild. But for us to get this 75% win rate, we have to be executing the right criteria. And that's what I want to talk about, right? So let's go over, this is Monday right here. This is 6/16, okay? This was my best trade all week. It was Monday morning. And I really want to talk about this trade because there were some things that were giving me a little conflicting emotions here, okay? And number 1 was previous day high, okay? So about a little bit ago, I said the purpose of this webinar was to break down moving averages, okay? And when we hear the word moving averages, what I used to think was a tool that helps you realize if the market's going up or down, okay? That couldn't be further from what they do for me, okay? Yes, moving averages help us understand if the market's going up, if the market's going down. But you know what else they help us understand? The strength of the trend. They help us understand acceptance. They help us understand who is currently dominant, right? Is it buyers? Is it sellers, right? And this is very important information because if I show you this chart, okay, what do we have here? We literally have a supply zone from the previous day, okay? A supply zone's an area where we can maybe expect higher than normal selling, okay? This zone hovering here at previous day high, we could call this a supply zone because there was a large amount of selling that came in from the previous day. So the way I used to trade was I would be automatically looking for selling in this zone because that's what happened yesterday. Now, fast forward a couple, 2-3 years, now I'm looking at the market like, yes, this is a supply zone, but how are we approaching it? That is more important than what happened yesterday, okay? What happened yesterday is relevant, but it is not more relevant than what's happening right now. Okay, we have to be able to identify who's taking control of this zone, because if buyers take control of PDH, our next upside target was literally 605. Boom. Look at that. Price literally popped, blew through this. And we went and we capitalized on a trade well over 100% ROI. And this is the thing. How did we know buyers were going to prevail? Okay, well, first things first, we didn't. But what we do know is when our edge shows up, we have an 82% win ratio over the last 10 months that this is going to continue in the dominant direction. That's all we know. Yes, we have previous day high right here. But we have our three-step approach presenting itself, okay? Open print, moving average cross, red bar gets ignored. How do we know it gets ignored? This candle right here, the high of this candle is 60171. The high of this candle is 60167. Therefore, this candle was ignored, okay? When the high gets blown out, I enter long, okay? When the candle gets ignored, boom, I've been triggered into my position. I'm getting in long regardless of the zone, regardless of what's going on. And now I can do this confidently because the data is there, but more importantly, the moving averages are telling me to, okay? Josh, what do you mean they're telling you to? Dude, look at where the 1 hour 9 is. If you guys go back to the data that I've been accumulating here, if you look, I started this study a while ago. If you look at these winning trades, these trades that we take that continue in our favor, yes, our three-step approach is present, but you know what else is present? Look where the 1 hour 9 is, okay? The 1 hour 9 displayed by this horizontal blue line is right on the area we get in long. Look at this one. We literally long play here off open print. How do we know it's going to continue? Look where the 1 hour 9 is. We're bouncing off the 1 hour 9. And the 5 minute 9 is very healthy. This is a loss. Look at, we're far away from the 1 hour. And we got a pocket. Pocket means pullback, right? This is stuff we go over. Look at, we ended up getting back into the market 30 minutes later. What was the difference? The 1 hour 9. The 5 minute trend. See, when you learn to spot these healthy trends, they increase your chances of capturing that trend in the appropriate direction, right? Look at this one, right? Moving average cross. But the moving averages are all out of whack. This one, moving average cross to the upside. Red bar gets ignored. We get in long. Why? Look where the trend is, okay? So, basically, learning to understand what the 1 hour is telling you, what the 5 minute trend is telling you, it gives me so much more confidence. Yes, when I see my edge, I have an 80% win ratio. That's awesome. But when I couple that with a understanding of what the 1 hour is telling me and the 5 minute time frame moving average is telling me, it helps me identify acceptance. And acceptance is one of the most important things we need to be able to identify, right? Like, if we're coming into a supply zone, we can't just assume sellers are going to show up here, right? We can't be naive and be like, oh, red candle, get in short, right? That's not repeatable. We have to be able to understand buyers are here, and that's exactly what happened. Went long, captured a beautiful long play right here. It's an absolute amazing trade. I couldn't be more thankful for the way it played out. I got out at the top of this candle right here, literally capturing, I think it was about $3 move here, just off that beautiful pop right here at previous day high. So Monday was an amazing day. I was very proud of the way we traded it, one and done. And once again, just like all thanks to just proper execution. Hold on. Okay, my computer's getting a little funny. I think we're good though. Yeah. Beautiful trade. Beautiful trade. And when I look at this, guys, the first thing I'm looking at is that 1 hour. That 1 hour. Me and a client of mine, we were just going over the difference between Monday and Friday, and we'll tackle that when we get to Friday. But basically, the reason why Monday continued in the morning and Friday didn't is the one difference is the 1 hour time frame. So once again, just a beautiful, beautiful trade. Beautiful day there. All right, let's get into this. This day, garbage, absolute garbage. Tuesday was trash. I want to talk about how Tuesday was trash and how I was able to stay away. Hold on one second. Give me 1 second here. I gotta verify something here real quick. My computer is acting a little crazy. All right, what did I do Tuesday? Did I make a trade? Give me 1 second here. Yes. Okay. Yeah. Okay. So I did put on one position here. It was right here, and I got stomped out. Okay. So Tuesday opened up. Okay. Tuesday opened up. We're getting very large wicks. Prices all over the place. There's no structure here. We finally start get bullish momentum to the upside. And what the fuck? All right, hold up. My computer's gone full retard. Oh, God. All right, there we go. All right, I think we're back. It looks like I just got kicked off TOS. Hold on. Nope, we're back. Okay, so Tuesday opens up. There's just nothing. Our edge is not present. Okay, look at the very large red candle that we get. Like when I'm getting very large red candles and I need an RBI to go long, I'm not trading. I'm not. There's no trade for me here. We don't get an RBI. We rally into the top. We reject. Price comes down. I seen a trader take this long right here. That was a beautiful trade. I think Sparky took it. That was a phenomenal trade, Sparky. Really good job at look at here how price comes back into the open and comes back into previous open print, and then we get a very large bounce here. But I also want to point something out. Look at the 1 hour 9. Okay, when price gets close to the 1 hour, we get a strong move out of it. Okay, that's why going long up here would not have served you well. We're far away from the 1 hour, so stay away from entries. Okay, just staying aware of what the 1 hour is telling you it's just going to serve you really well. I went long right here, and I ended up getting stomped out of my trade on the next candle. I should have kept my stop below the low of that red bar. I just didn't. It was more than 80 cents risk. So I ended up taking a loss, and I just didn't like the price action for the day, so I walked away, right? And this goes back to, I don't know if you guys watched that video I made on expectations. Like, expectations, your expectations to the market are so important. Like, if you can't walk away from a shitty day, then you honestly really shouldn't, like, that's one of the reasons why you might not be consistent, right? Like, if you're struggling with consistency and you're looking for something to, kind of work on, I would focus on my expectations, okay? If you can, if you that's literally gonna be one of the main issues, right? Because if you're just firing off multiple trades and the market's not working in your favor, it's probably because the market conditions aren't fruitful, okay? These aren't the days you want to take 2, 3, 4, 5 trades, okay? In my opinion, these are the days you take one trade. If it goes against you, you get the hell out of the market. There's just no reason for me to trade here, okay? There was no follow through. Price action was not fruitful. And we know this because our edge really wasn't presenting itself, okay? If my edge isn't presenting itself, it's for a reason, Okay, that's what helps me walk away from these days. So we're gonna fast forward here, and we're gonna go into Wednesday. Beautiful trade Wednesday. FOMC, one and done. Okay, what about this day? Right? This was such a beautiful day. I think I made a couple videos on this day. Because there was just so much to talk about. But for the purpose of this webinar, guys, remember, I really wanted to talk about the moving averages, okay? Look at where the 1 hour trend is, okay? We sell off, we come into end of day. Very strong buying out of end of day. There's once again, there's no green bar ignored here, so there's no short play for me. If we got a GBI, I would have went short, but we didn't, okay? So instead, price rallies on the end of day. We get a beautiful move to the upside. Now we get presented with a red bar that gets ignored. Do we go long? Well, the data tells us to. But what else can we use to give us extra confirmation or confidence to get into this position? The moving averages. The moving averages were key here. Let me turn off the cloud. The cloud worked great. But if I'm to take this cloud off here, I'm going to try. My computer's acting really retarded right now. So we're going to pull the cloud off. Let's see if we can get here. Okay. Look at the moving averages here. Number one, the 1 hour 9. Notice here, we're below the 1 hour 9. Okay? And then what happens when we get back above the 1 hour 9? We get a rally. See, this is the concepts that we use on the 5-minute time frame work perfectly to the exact same extent on the 1 hour time frame, okay? Look at right here on this 5-minute chart, okay? 5-minute time frame, right here on this candle, we are below the 9 DEMA on the 5-minute. Then we close back above it. What happens? Rally. So that same concept of being below the moving average, then closing above the moving average, works on the 1 hour as well. So when we are below the 1 hour 9, and then we get back above it with an RBI and a healthy 5-minute trend, I am getting in long. I don't care if this RBI was all the way up here at 601. If the 1 hour trend made sense, I'm getting in it. Okay? Because healthy trends continue. It's not how I feel about it. It's just how it works. Caught a beautiful trade here. Was done on OMC. It was absolute. It was so good because I had my daughter was graduating kindergarten this day, so I only had until like a 10:45 to trade. She graduated and then we took her out to eat and kind of made the day about her. So it was really good here to be able to capitalize on that. Hold on, I think all right. So that was beautiful. One and done. And I hope you guys are starting to see a pattern here. Actually, I was not one and done. I took one more trade this day, and it was right here. I decided to get into the market here on FOMC. Are you guys having audio issues? I apologize if you are. My computer is acting completely retarded. Okay. Okay, so I took one more trade right here. You'll see red bar gets ignored right here at 600. I take the market long, and price just ends up reversing on me almost immediately, and I get stomped out of my trade. Okay? Now, once again, I entered into this position pretty small. And once again, it kind of goes back to expectations. I captured this beautiful long play right here in the morning. I went out, watched my daughter graduate, got food, had a great time, got back in front of my computer right here, seen a red bar get ignored. But just to point out here, guys, look where the 1 hour trend is, right? It's something I failed to notice. 1 hour trend's down here, 59892. It's literally over $1 away. Actually further, almost $2 away after that red bar gets ignored. So of course it came back to it, right? So, it's just when you become aware of the 1 hour trend, you'll start to notice how important it is to follow it. It's very important to follow it, and you know, it keeps you more on the side of the market. And then Friday, man, this day was just amazing. I was so proud of us this day. I mean, let me just throw the cloud back on here so we could just go over this in deep detail, because this was this trade right here. You know what I love about this trade is this is the trade we look to trade every day. Like this isn't a unique or special trade. There was nothing like like there was nothing out of the ordinary here. This was literally nothing other than us executing flawlessly. Okay, a price rallies up in the morning. Okay, yes, we get a red bar that ignored. Do we go long? No. Why? Look where the 1 hour trend is. Okay, 1 hour trend is $5 away. $5. So if you long this, you have to be okay with a $5 pullback. Okay, so in no moving average cross, there's no trade for me. We fall below the open. Price starts to sell off. Look at that beautiful red candle right there, cooking through open print. Now, once again, there's some traders that can capitalize on these. There's nothing wrong with that. Okay, I'm looking for extreme repeatability, so I wait. If the trend doesn't have an RBI or a GBI, I don't want to be a part of it, only because it's not what I like to call healthy. Okay, so I wait for the GBI. We get the GBI. The GBI comes into the market. We go short, right? You guys, all that I'm looking for here is short criteria. We get it. Once we go short, what do? Draw a box around the green bar, okay? Box around the green bar. Where's our stop go? Directly above it, okay? What are we targeting? The 1 hour 9, okay? We're targeting, yes, the 50 EMA is there. Josh, what if it bounces? Just like we were talking about Monday. Yes, there will always be something that could contradict your strategy, your intention. Don't let it veer you off the path, okay? When my strategy presents itself, the homework's been done, okay? We have to get into the position. So we get in, stop goes directly above the candle. We rally right into the 20, right into the 2-minute 20, and we get this beautiful move down to 59542. This was blueprint. And once again, right? Like, there's nothing special about this trade. There's nothing like, there's no information that is very secretive, right? Like, it's literally our edge presented. We got into the position. That's it, right? There's no trick here that you need to know for Monday, right? The trick is execution, right? Because if you fail to execute on this trade in Monday morning's trade, now you don't have a profitable week. You know what I'm saying? Like, you are only as good as your ability to flawlessly execute when your strategy presents itself, okay? So this trade and this trade, there's one more thing I want to talk about here before we get off, and it's the difference between this day and Monday, because the trades were pretty much, the mornings were very similar, okay? So you see here, Friday, we get a red bar, gets ignored, okay? This is Friday's trade on the left. Monday, we get a red bar that gets ignored. Now, the one day continued, which was Monday, on the right, and one day didn't continue. What's the difference? The 1 hour trend, okay? Let me show you guys this real quick. Let me go edit studies here. We're going to throw the 1 hour on. Look where the 1 hour trend is, okay? This is, guys, listen to me when I tell you how important this shit is. 1 hour trend is literally right here. The 1 hour trend is right here on Friday, okay? So yes, we have a red bar that gets ignored Friday morning. We have a valid 5-minute trend. But what we don't have is a healthy 1 hour trend on the 1 hour time frame. Okay? So just really learning to spot those healthy trends on 5 minutes, on 1 hours. It literally all it is really understanding if the market's extended from the 1 hour 9 or if it isn't. Okay? I like an extension for me is at least over $1.20. Sometimes maybe $1. It kind of depends on the volatility. But overall, guys, this week was phenomenal. It was an absolute amazing week. We didn't take a lot of trades, and once again, you don't need to. You do not need to take millions of trades to be a great trader. Literally, the less you trade is usually the better. If you stayed away from the market because you didn't like the fundamentals, you know what? Good for you. Trading's all about becoming more disciplined. And, those disciplines are going to vary. Just because one person doesn't trade news or one person does, it doesn't mean it's either right or wrong. It's what works for you, okay? So going into this week, I just want to, real quick here, we got a couple more minutes. I just want to briefly continue to go over the data and just the trades that we've been taking and where we're at for the month of June. So far, if my computer will let me, I really don't know why it's acting like this. I think I got to restart it, but I don't want I've already started here. So let's see. Oh, God. There we go. Okay. So I'm going up to the top here of the high-level summary. So far for the month of June, we've had 16 HPT cross setups present themselves. 4 of them have been unprofitable, meaning they did not continue for at least $1. Okay? So we're currently sitting at a 75% win rate. Go figure, right? Every month is relatively the same. You know what was really funny to me, guys, too, is for the month of May, I don't know if you guys remember.